Today, we're going to do a deep dive into SSR Mining and their absolutely pivotal year in 2025. This was a year that, really tested them. They were forced to deal with a massive crisis while at the same time trying to pull off a huge strategic pivot. We're going to stick to the facts here, drawing right from their own annual reports and major announcements to see the full picture.
Okay, so here's our game plan. We'll start with the big picture, why they're at a crossroads. Then we'll get into the nitty-gritty of the numbers. We absolutely have to talk about the Çöpler mine incident and the massive ripple effects that had. That'll lead us to their big pivot to the Americas, and then we'll look ahead to their potential future growth engine, Hod Maden. We'll wrap it all up with the key takeaways.
So let's kick things off here. For SSR Mining, 2025 really was the definition of a company at a crossroads. They were staring down a huge crisis, which forced them to completely rethink their entire strategy and, believe it or not, find new opportunities in the middle of it.
Now, if you just listen to the official word from the top, things sound pretty good. The executive chairman, Hod Maden, pointed to a strong finish to the year. And he's not wrong. Their other mines were running well, production was up, and they definitely made the most of high gold prices.
Yeah, but hold on a second. How can you have a strong finish when your single biggest, most profitable mine is completely shut down? That's the real question, isn't it? There's a story behind that quote, and that's the puzzle we need to piece together.
All right, so to figure that out, we've got to follow the money. Let's dig into the hard data, because the numbers for 2025 tell a really complex story. You can see their resilience for sure, but you can also see where the pressure is really building. And at first glance, things look pretty solid, right? I mean, they produced more gold than they guided for. They brought in almost $500 million in operating cash flow and ended the year with a really healthy cash balance. And get this, they managed to grow their mineral reserves by nearly 40%. That's impressive stuff. Okay, quick sidebar, but this is super important. We need to understand a term you hear all the time in mining, AISC, or all-in sustaining costs. Just think of it like this. It's the total rock-bottom cost to get one single ounce of gold out of the ground and to market. The lower that number, the better. It's that simple.
So keeping that in mind, look at this number, $1,923. That was their cost to produce an ounce of gold in 2025. And here's the kicker. That number doesn't even include any of the costs from their suspended flagship mine.
Now, to really see what that means, let's put it in context. Their cost is hovering up near $2,000 an ounce. The industry average, well, that's way down between $1,200 and $1,500. So you can see they're spending a lot more money than their competitors just to stay in the game. That's a serious headwind for profitability. So the big question is, why? Why are their costs so high? Well, it all comes down to the single biggest event for the company, not just this year, but maybe in its history, the tragic incident at the Çöpler mine in Turkey. Let's just walk through what happened here. In February of 2024, a devastating incident occurred and boom, everything stopped. Operations were fully suspended. Ever since, it has been a nonstop effort of remediation and containment, all while trying to navigate a very complex path with Turkish authorities on if or when the mine could ever restart. And right now, that timeline is a big question mark. And the financial weight of this is just staggering. The total cleanup bill is estimated to be in the hundreds of millions. But just look at the direct hit in 2025. Over $53 million spent directly on remediation, plus this constant cash bleed, about $20 to $25 million every single quarter, just to maintain a site that isn't producing anything. Okay, so your main engine is down, it's costing you a fortune, and the future is uncertain. What do? Well, you don't just sit there. You make a bold move. You pivot, hard. And that's exactly what SSR Mining did, launching a strategy to de-risk their entire business. And the centerpiece of that pivot was this, the acquisition of the Cripple Creek Victor mine in Colorado. This wasn't just buying another asset. It was a deliberate move to strengthen what they called their Americas platform, giving them a solid, producing mine in the United States. This really gives you the perfect before and after picture. In early 2024, they had basically all their eggs in one basket, a single mine in a single country. Fast forward to the end of 2025, and it's a completely different story. They've built a much more balanced, resilient company with key assets spread across the US, Canada, and Argentina. But, a company can't just play defense forever. You have to have a plan for growth. You have to look to the future. And for SSR Mining, that big, bright spot on the horizon is a project called Hod Maden.
And here's the interesting twist. Their future growth engine, it's also located in Turkey. So even with all the challenges at Çöpler, the company is betting big that Hod Maden is a truly world-class, transformative asset that's worth the jurisdictional risk. And when you look at the economics, you can start to see why they're so excited. I mean, the technical report on this project estimates its lifetime value, its net present value, at a massive $1.66 billion. That is a huge number. On top of that, check out its projected internal rate of return, or IRR. It's 39%. Now, just to put that in perspective for you, in the mining world, anything above, say, 20% is considered excellent. 39%? That is absolutely off the charts. It means the project is expected to be incredibly profitable. But honestly, this might be the most important number of all. Remember their current cost of over $1,900 an ounce? Well, the projected all-in sustaining cost at Hod Maden is just $590. That's not just better, it's a total game changer. A mine like that would be a massive cash cow for them. Okay, so after that whirlwind of a year, let's pull all these different threads together. What's the bottom line for SSR Mining as they head into 2026?
It's really a tale of two companies, isn't it? On one hand, you've got the strengths, a new diversified portfolio that's generating cash, a phenomenal low-cost growth project on the horizon, and a strong balance sheet. But on the other hand, you've got some serious challenges. Those persistently high costs, the giant question mark hanging over Çöpler, and the tough balancing act of paying for remediation and funding future growth at the same time.
And you can see that exact tension reflected in their own forecast for 2026. They're guiding for higher production, about a 10% jump, which is great, but they're also warning that their already high costs are going to climb even higher. And maybe most telling, their entire plan for the year assumes they get zero production out of Çöpler.
So it all boils down to this one central question. They have this incredible company-making project waiting in the wings, this golden ticket to a super profitable future. But can they manage the present? Can they get a handle on their rising costs today, long enough to actually build that future tomorrow? That's the challenge they face.